Hello, hello, hello. Happy Monday, everyone. How is everyone doing today? Good morning, Patrick. Good morning, Royal Palms. Good morning, Jacob. Good morning, Yogi. Good morning, Heinrich. Good morning, Zello. Good morning, Eric. Good morning, Tony. Hope everyone had a good weekend. Bombs are falling. Looks like U.S. attacked. Well, we know U.S. attacked Iran. So we'll see how this all turns out. Good morning. Good morning. We've had action in the markets. Good thing we maybe you put some volatility hedges on. Maybe. I have been talking about that. Uh, so oil continues to run up now. Big gap up last night. But what else is going on this week? What else besides the war headlines, which will keep unfolding throughout the week? Who knows how long this will go on for? But we got to still cover the other things that are important to the markets also. So today we have the S&P Global Manufacturing PMI numbers coming out at 9:45 Eastern. The ISM numbers coming out at 10 Eastern. What else do we have tomorrow? We have Redbook, uh, Kashkari and Williams speaking. Wednesday, we have the EIA numbers, the ISM services numbers, and the S&P Global Composite and Services number, and the ADP weekly numbers, and Fed Beige Book in the afternoon. Thursday, we have import-export prices, non-farm payrolls, initial jobless claims. So that's where we have there. And Friday, we have the overall, that was the quarter over quarter preliminary numbers on Thursday. And overall, we have the big non farm payroll Friday. So we'll see how that ends up, and retail sales. So that's where we stand there. Good morning, Christoph. Hello, Charles. So, still a very busy week outside of what's going on in the Middle East. I am in the office has now been moved to the master bedroom. Everything's been moved to the master bedroom. Uh, 20 walls have been reframed. They're still working on drywall, and starting today, the floors start getting ripped up in the whole house. Separate from the master, there's carpet in the master and two other bedrooms. So those are not getting ripped up, but everything else is getting ripped up. Yeah, and it is an absolute mess. But we got everything working this weekend. New homes are crap. I completely agree. All right, S&P 500. We move some windows around here still. Good morning, Sterling. Hope you are well. We have everything except Palantir. You have pretty much everything down across the board. You have your aerospace defense stocks up, and your energy stocks are up. And then you got little Newmont mining up. But everything else, uh, Corning up. That's related to again defense stuff also. Oh, you got O'Reilly. Everybody needs some auto parts in times of war. So definitely a risk off broad market and pouring into defense and war stocks right now. Sectors. Let me just refresh this. Everything basic materials. Slightly up 4 basis points. Energy up 3.24%. Consumer cyclical lagging at 2%. Com services also lagging. Hold on. There we go. Fed Watch still has a pause for March. Fear and greed in fear mode. Schiller PE. Remember, this is the first trading day also of March. First trading of March. Schiller PE at 40. What else? Sorry I was late. It's not a problem, Sterling. Uh, well, you're always welcome to be late. Everybody's welcome to be late. Yeah, Palantir is green. We're so dark screen. Where have you been? Go all in gold. Oh boy, are you going to call a top and gold dark screen? Uh, where have you been though? So today, not much in terms of, I guess, if you're in Norwegian Cruise Lines or something else. But other than that, not much. After the close, really not much. That's going to be market moving. Tomorrow, I'm paying very close attention to Target. We got also Best Buy, AutoZone tomorrow morning, CrowdStrike in the afternoon, GitLab, uh, but Abercrombie Fitch on Wednesday morning. Broadcom, that's the big one, Wednesday afternoon. Uh, Costco Thursday afternoon. Thursday morning we got Kroger, Sienna. Again, the things this week that I'd be looking at. I'm looking at Target, Best Buy tomorrow. I'm looking at Broadcom uh, on Wednesday afternoon. I'm looking at Costco on Thursday afternoon. Those are the big ones. I'm going to keep a eye on Kroger, and then Friday not much either. So, good morning, Balaji. If this conflict forces Japan to raise interest rates because they get inflation, how soon could that happen? Funny you bring that up. Funny you bring that up. How soon could that happen? Oh, I don't know how soon it can happen, but I was looking at Japanese interest rates this morning. They've been pulling back. I mean, they're still above 2% on the 10-year, but we have nice double bottom formations on the 10-year and the 30-year. So I'm paying close attention to whether those trigger or not. That's just a little side. Now, from that, we gapped down on Sunday night, came back down to retest of Friday's lows and rolled over, but we're still just purely holding this critical 50% harmonic level. We dipped into the 50 to 62 area, which we've dipped in back in mid-December, which we dipped in the beginning of February, and now we've dipped in the beginning of March. So this is key support, the 6874 area to 6870, 6874 to 6784 to 6770 area is very key support. If we break that, especially if we close below this 50% level and close below the low close from mid-December, then I'm watching for the retest of the 6720 area. Good morning, Ted. And we're into a clear path move. Remember, critical, as everyone who's a longtime viewer knows, 67.1925, which is the exact 62.5 on a closing basis, is key. So this is where I'm watching for support. We've already bounced off there once. You can see here. This would be, if this managed, it pulled above it briefly against the rotation zone, but that would, if it rallies back up in the open, would be a very aggressive percent beat buy. Again, very aggressive because that's to be tightly managed. On any rally, it's going to be key. We're starting to get separation again on the rotation zone, and on any rally, not necessarily today, but this week I'll be watching to see if it can even fill the gap from Friday. That's what's going to be key. Overall, we still have a potential big rounding top formation. So, good morning, Jake. So, we start breaking those down below these lows that were established overnight. Going to be looking at the 67.19 area. And then if we close below there, 66.54. And then possibly a reconnect with the 200, which would be the first reconnect since it broke out above it after the tariff tantrum. So that's going to be key. NASDAQ, this gap down invalidates the confirmed but not triggered double. That's why you got to wait for those triggers. 200 is right below here. So it's already gapped down to a key support level, which was back from the 17th. If we take that out, I'm watching for the retest of Friday the 6th of February, which is also where the 200 is. So that's very key. If we take out the overnight lows, I'm looking for, again, about this 24,250 area. And if we take that out, 24,080, and then the very key lows from the day after Thanksgiving in the USA, back 21st of November, Wait, was that? No, that was the week before Thanksgiving. Sorry. Boy, all the way back there. But that would be very interesting. And that is very key because that is also the massive weekly double top with the 50 EMA on the weekly right there. So this is going to could get to a make or break point in the NASDAQ. Good morning, Anissa. Does not mean it has to break, but it's getting very interesting. The Dow, on the NASDAQ on a rally, I'm paying very close attention to the area around the overnight highs, 24,900. And if we rally through there, the gap fill to the close, 25,004.75. So 25,000 for the gap fill. All right, we're starting again get separation. We popped up on Wednesday, but then immediately got back below the rotation zone and the 50 on Thursday, and could not sustain anything on Friday. The Dow gapping below key support and already testing it and failing on that. So again, if the Dow can break above the overnight highs, which were also right by the lows on Friday, then I'd be looking for the gap fill. 49,000 to the gap fill. Really nice end of the month pin on the Dow. Other than that, we're at the 50% harmonic from the run up. We take out the 50% harmonic. The next little support ledge is right at the 62.5, 47,591. But today I'll be watching, if we do sell off, how we close in relation to 48,195. The Russell, we still have a potential double top. Let me just verify this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So this week will determine whether this gets confirmed and possibly triggered or whether it falls off the table. Because if it extends without triggering, what? We're at 12, so 13 is Tuesday, 14, 15 is Thursday. So if this is not trigger or confirmed by Thursday, this potential is off the table. If it does, the final target by the 75% harmonic right around that 200. So this will be very interesting, but we're back below the 50 again, well below the 50, and that's the first time we've been back below the 50 since the end of November. So I'm going to be keeping an eye on this. On a rally, I'm watching overnight highs, which are really close to Friday's lows. If we get through there for the gap fill to 26.35 roughly. The key on the closing basis is 25.66.8. Do overnight gaps on news like this usually fill? They usually fill, but not necessarily right away. It does not mean we have to fill it today. The VIX, remember, we held that trend line, and now we're still below the spikes in November and in October. But on these kind of spikes, you know what I say, I like to unwind some of the volatility hedge just in case we do get the Russian dip buyers and then leave something on for the potential bigger spike up. But we've been seeing volatility, as we talked about, this rising trend line has still held. So volatility has been edging up. The yields, big drop overnight and strong reversal. Back above the prior support. And if you look at the contract, it did not break above the highs from last April from the tariff tantrum. So yields dropped because of a flight to safety, not with anything with inflation stuff. But now have quickly bounced back. So dip buyers coming in, yields got overdone when they really plummeted. And now retesting this, now back above 4%. Closing, interesting, below 4% on Friday, but back above 4% today. Theoretically, there would be a percent beat buy if it closes above Friday's high, but I don't think that's going to happen. Russian dip buyers. Poly market how many people are betting on will Jesus return before 2027? How many people are betting on that? And what are the odds there, dark screen? What else we have going on? We've got gold. Remember, finally, oops, finally, we tipped the probabilities, and this has been a great secondary study in the secondary reaction. So we tipped the probabilities last Monday. Now with this, we're gapping above the 75%. So my first target, remember, we were long back down here from the percent beat buy, and remember we had an add-on percent beat buy from the 4 hour, and then it was just trailing. And now we've already hit the 75%. The next target, 54.76, based off the 87.5 price. Backing off a little bit there, but now the rotation zone providing support. And unless we're closing back below 5,100, not worried about anything with gold. Silver. We have the steep neckline, inverse head and shoulders, gapping up. Silver already has filled the gap to Friday. And we're in the major rollover zone, separate from this inverse head and shoulders. We're between the 50 and 62.5, which is major. Remember, silver has not tipped the odds yet. Silver has not tipped it. Please keep that in mind. All right. So this is still within the major rollover zone. So even with this, it'd be advisable to raise stops. What else we have? We have crude, the big gap up. My next target was this area of the, I said in the newsletter that came out, between 75 and 76. And look where we gapped up to. We gapped up, open at 75, and we got to 75.33 before reversing. So we hit my target area on that. Does that mean it has to stop there? No, but again, unless this escalates with starting to blow up a lot of Mid-East oil stuff, then we could see higher prices. And if that breaks out, this is very key. The 200 week, you see all the way back here how it was support. We shifted resistance here, right here, just short of it. Resistance here, didn't quite make it there, but now we've essentially got right there again. So it would need to really break above this and close above that. Then we'd be looking at possibly around 83.50 and then about 86. Other than that, this is a major resistance area. 4% chance till now. So we're not at anything significant yet. Natty gas. Remember, because you had the plant in, what was it? The plant. Oh, they just shut it down. I forgot the country it was in, but it's been taken offline. So European natty gas prices are spiking, but not. It's not going to affect us that much. So that's why you're not seeing anything here. Dollar index finally hit the 200 and stopped. Look at this with the 62.5 spiking right up there. So going to be interesting to see where today closes. Other than that, still staying in short-term bullish mode. We're getting separation in the rotation zone, but we need to shift the probabilities now. So we'll be still watching for any buying setups on pullbacks. We already quickly looked at the yield, the potential double bottoms, and the yields in Japan. And the yen also weakening again. By the way, this is not a double bottom. It's just a two-bottom formation. So going to be watching again how we react if it can get back up this 87.5 area, which is major, major resistance. The spiders gap down today. So on the rally, I'm going to be paying attention first to about 680.25, then about 681.80. Then it would not be to the gap fill to the closure on Friday. I'd be looking at the open price of 683.09, and then on a rally, and this holds for this week, the gap fill price would be to 685.99. And there is technically another gap from Thursday that is at 689.30. Now, key support 675 90 area. 675 is very key support. We start breaking below that. 674.35. We lose 674.35. There's still a gap left behind from mid-December at 671.40. So those are the key things. Again, a rolling rounded top formation is generally bearish. With this gap down in the Qs, remember the Qs never confirmed a double, but it's off the table now anyways. Key resistance is a 599.20. We get above there, it's to Friday's low and open area between 602.19 and 602.98, and then we have it to the close at 607.29. To the downside, if 599.23 holds, your next key support is about 596.70 area, and then we'd be looking at the lows from middle of February at 593.34. Below there, if we start taking that out, we could potentially reconnect with the 87.5 and the rising 200 daily. IWM, we're finally going to gap below the 50. So between the 50 and Friday's low is where I'm looking at any rally. 262.76 to about, sorry, 259.77. 259, about 50 to 259.77 is the first key area of resistance. And then it would be to the gap fill on Friday, 261.41. Going to be real interesting to see if we do rally, if it can regain the 50 or not today. Other than that, the very key support area, we're dipped below that 50% harmonic also right now, which is right at 258.73. The key tipping point for the Russell is 255.51, which we did not close below back at the beginning of February. So that is very, very key right there. You lost a bet back in the day that Gorbachev was the Antichrist. That was back in the day, holy. So that's where we sit. The good old Bitcoin, still the rotation zone is providing major resistance. That's the only thing I'm keeping an eye on. An overall bigger picture, we still, after virtually hitting the first target on the head and shoulders, still nothing there. But that is very key support. If that breaks, watch out. Other than that, not been able to sustain a bounce yet. If it does bounce, I'm going to be watching that 50 EMA. Gold is crashing. This is crashing. This is not crashing. It's pulling back from a gap up. Oh boy. Dark screen, I don't know about you, buddy. By the way, for the gold fill, which is very, very possible, the gap fill on gold, 5247.9. I'm watching the daily rotation zone and this 5100 level. So that's where we sit with everything. What's Sterling's take? Just my take. New Iranian leader choice was made in Geneva, and this is all their theater that will be over within 2 weeks. We shall see. We shall see, won't we? We shall see. It'll be interesting. Don't know how it's going to play out. That's why I'm not going to do predictions based off of the things the way I think going to play out. I'm just going to look at the markets and the levels. That's all I can do. We've been setting up these formations well before this sell-off right here. We've been setting up the stuff in the VIX with the rising VIX key trend line. So, whether it follows through, we break to the downside or not is still to be seen. But there's been warning signs before this even happened that we could have some more tumultuous times. And remember, crude also. Remember, we got above the 200. We held the 200 and we pulled back to rotation zone. By the way, interesting enough, on Friday, there was a percent B buy trigger and a rotation zone trigger. And then we had the big gap up. So, does that mean it has to keep going? No. But that's why my targets were between 75 and 76. And we gapped right up there. So, now we're just going to watch the pullback. Yeah, we got the Ides of March. Will Iran mine the Straits of Hormuz? Who knows? Who knows? On your 1 minute chart, gold's crashing. Oh, it's too early for this dark screen. All right, well, at least we got the setup working. So again, there could be something that happens still where I need to cancel or modify a live stream. Follow me on X/Twitter at MGArnold to know about that. Otherwise, I will plan on being here for the next couple weeks of hell. So, Russia thought they would take Ukraine in 2 weeks. Who knows? Who does know? I can only trade what the charts tell me. I know nothing else besides that. And with that, I shall talk to everyone. Oh, let's just see where the S&P is doing off the open. Let's go to my 1 minute chart. So into the open, really pay attention to 68.31 area on a rally. With that, I shall talk to everyone later. Bye for now.